In this video, I'm going to show you how I identify and draw supply and demand zones, which I would argue is one of the most, if not the most, valuable concept that you can learn to improve your trading significantly. Drawing supply and demand zones can be somewhat subjective, but I'm going to show you how I draw them and what I've personally found to be the most accurate. Hey, my name's Tommy, and on this channel I share tips and tricks to help you with your trading and teach how to automate your trading strategies. I'm not a financial advisor, this is not financial advice, so please do your own research and read the full disclaimer in the description of this video. All right, so you might be wondering, what is a supply or demand zone in the first place? In simple terms, supply and demand zones just refer to areas of the chart where there tends to be a lot of buying pressure or a lot of selling pressure. In the case of a lot of selling pressure, we refer to those as supply zones. In the case of buying pressure, we refer to those as demand zones. In other words, in a supply zone, there's a higher likelihood that the price will fall, and in a demand zone, there's a higher likelihood that the price will rise. So if you get good at this and you're able to accurately identify where these reversal zones occur, you can use this information in other trading strategies and to put the odds more in your favor. And as I mentioned before, a lot of people draw these differently. So the way that you draw these can be really subjective. And so you want to try to remove as much of that subjectivity as possible. And so in order to do that, I try to stick to three main rules. So what I look for is number one, a significant move. And so I try to identify a significant move, like in the case right here, where you've had a significant move upward, and it typically creates a gap when you have these significant moves. Number two, what I look for is a balanced area. And what I mean by balanced area is I use the candle bodies. I try not to use the wicks as much as possible. A lot of people use the wicks. I try to use the candle bodies. So in this case, you can see right here, we have a down close candle body, and we have this longer up close candle body. And what I do is I line up the candle bodies and I make a zone out of that. And if there's hardly any body, like if you look at this candle down here, how the body is very small and tiny, in that case I will use the wick, but only when the candle's very small like that. And so in this case, I actually have two different zones drawn out. And if we look to the left, you could see that we have a balanced area right here where we have the candle bodies. And if we draw a box around that and pull it across, we can see that this wicked right into that candle body area, and then it dropped back down. And if we pull this across, once the price got above this zone, then it actually turned into a demand zone. And I have these little templates here where I can just select whether it's a demand zone or a supply zone. In this case, I will choose demand zone. And those templates are really easy to create. So for example, I could just create a rectangle here and say I wanted to create one with an orange border. I just right click on it, go to the border, change it to orange. I can change the text to something like demand zone. And after I make those changes, I can go to template, save as, give it any name I want, and then it'll be in your template list. So this turned into a demand zone, and if we keep pulling it across, you can see the price came back, it hit this demand zone, and it bounced out of here again. And you can keep doing this over and over again. You'll once you start looking for these, you'll see this all over in the chart. So for example, here's another supply zone right here. So I'm lining up the candle bodies. I'm not using the wick, I'm just lining up the bodies. And we do have, it's a somewhat of a significant move up there. It does create a gap right there. And so I'll pull that across, and you can see like almost to the penny it hit the top of that box. And if we pull it across again, it pulled back right into the zone and then took off again. And because it creates this gap here, well, that satisfies our condition again. And we can line up those candle bodies, drag it across, and notice how when the price goes back into that zone, it wants to rise again out of that zone. Now, they don't last forever. Eventually it will close through the zone, but at that point, then you just start the process all over again. So we talked about two of the three things that I look for. We talked about the balanced area with the candle bodies. We talked about the significant move that creates a gap. And the third thing that I look for are wicks. And so if we go to the left over here, notice how we had this demand zone that created this wick that wicked into the demand zone here. We also have a wick that wicks into it as a supply zone right here. And this level hasn't been broken yet. And so as long as the level hasn't been broken, what we want to do is we want to drag it across and see if that level still holds. So even though it sliced through these two levels right here, notice that this level with the wicks, it is still holding strong. It went into this level, never closed below it, and it shot right out of the gate there and went all the way up to the supply zone on the top. And the supply zones, they work exactly the opposite way of the demand zone. So again, we want to look for a significant move. We want to look for the balanced areas. And this particular supply zone at the top, we had a small candle body. So in this case, I did end up using the wick. We didn't have a gap, but we did have still, I consider this to be a significant move because we had three down close candles in a row. And so I just line up the down close candle body, drag it across, and as you can see, it hit this level 1, 2, 3, 4, 5, 6 different times. You had the opportunity to jump into a short, and it came all the way back down to our demand zones. And from that point on, you could just rinse and repeat the process. And as you can see, on a much smaller scale, this process just plays out over and over and over again. So as you can see, we had a significant move here. We have balanced candle bodies. If I take those bodies and drag them across, notice that's exactly the level that this came up to before it went back to the demand zones. And what I tend to like to do is I'd like to use two different time frames. So I like to use the daily time frame and I like to use the hourly. But this plays out on every single time frame. Okay, so here I am on the daily time frame, and you can see all the levels over here. Those were from the hourly time frame that we were just looking at. But what I tend to do is I tend to mark the daily time frame first, and then I go into the hourly time frame for my entries, since the daily time frames tend to hold more significance. So let me just go through a few of these just so that it'll make a little bit more sense. So you can see we had to move up. There's a big consolidation right here. And actually right here we have a kind of a big, I mean, it doesn't look like a big candle compared to the ones on the left, but it did end up creating a gap. So this is where I would have put a demand zone. And you'll notice if we drag this across, it actually does wick into this demand zone before it ends up taking off. And if we continue to drag it across, see that zone continues to be respected. And actually, once the price made it below the zone, it continued to be respected all throughout. If you look at this move here, we did have a balanced area. That one didn't hold initially, but then it did wick back into it right here. So that's still a level that I would have drawn out. As far as the supply zone on the top, there's a balanced area there. And you can see that we initially had a strong move down, but then it immediately moved back up into the zone. And then right after it hit the zone, it sold off again. And by doing that, it created another balanced area. So what I would do is I would actually take another draw out another supply zone and mark out that balanced area with those candle bodies. And if you drag that across the top, again, you can see how those candle bodies continue to be respected all throughout. So once I have those major levels drawn in, and actually what I would do is I have a template here where I can decipher between the major zones and the normal zones. So if I'm drawing them on the daily time frame, I would actually change this to a major supply zone, and that way I can easily tell the difference between the majors and the minors. So let me go ahead and change these to majors really quick. And this one right here is a measure. And then after I do that, I would dive into the hourly chart, and you can see the purple areas are the majors, and then once we get into the hourly, you can really kind of dial things in. And so you know that we're looking at a major daily time frame up here, for example. And here we have balanced candle bodies. Here, let me change this to supply zone. And notice how this pulls up into that supply zone before it drops. And if we continue to drag that over, it continues to respect that zone. And if you look at the major zones on the bottom, again, it pulled all the way down into this zone down here. It was respected and continued up to the supply zones. But you could go through and follow that same process. You're going to see, even on the hourly levels, you're going to see this over and over again, how it wicks into those and pulls back before continuing on. So I'm back on the daily chart, and I just wanted to show you just how significant these daily levels can be. So for example, you see we got a pivot point right here. So I guarantee there is a, yep, it looks like we have a significant level. If we go over here, see that we have a significant move with the candle bodies lining up. I'm going to go ahead and make this a demand zone. And this just goes to show that you should always pull your levels through, because if you continue to pull them through, look at that. It is practically to the penny on top of that zone right there. All from this one little move right here where it created that gap. And it never really hesitated or stopped on that demand zone. It just sliced right through it there, sliced right through it again. So it almost had to come back and revisit that level. But that's why I always pull my levels through. And so if we zoom out, let's find another significant level. So if we go over here, for example, so one of the things I look for is a lot of wicks. So we see all the wicks here. And then here we finally had our significant move up. So what I would do for this level is I would take those candle bodies right there, and I would call this a major demand zone. And if we pull this across, what you'll see is you're going to see this get reacted to over. So you notice a lot of hesitation and consolidation right here. And if we continue to pull this through, look at that. Let me zoom back out. This is where we are today. It couldn't get above that level, but that level has held that significance this entire time since July of 21. Okay, so now you're an expert in drawing your supply and demand zones, and now you want to trade them. Let me show you the absolute easiest way to trade the zones directly in the chart without having to go to the exchange and type any numbers in or anything. It's super easy. So the first thing you want to do is take the horizontal line tool. Actually, the horizontal ray tool is better than the horizontal line tool. So draw a horizontal ray. And I have a bunch of templates set up for this, so I'm going to make it a line for my entry. And I'll just put them over here for now. I'm going to make another line for my stop, and I'm going to use my stop template for that. And I'm going to make another line for my take profit. And then what we want to do is we want to go over to TOMMYBOTS, which is 100% free, by the way, if you are only using lines to trade on the chart. If you're not using any of the advanced features, you don't have to use a paid account. So I have a bot already set up. Now, if you don't have a TOMMYBOTS account, it just takes a few seconds to sign up. All you have to do is go to the pricing section. You'll see that there's a basic free plan here. Just click on the Get Started button, add it to your cart and check out, and then go to My Account and then to the dashboard. And once you're on the dashboard, On the left-hand side, you'll see a section called My Bots. And if you click on that, for the first time you come here, there will be a form here where you can enter in the API keys to your exchange. And that will create a unique bot URL for you here. And this is something that you don't want to share with anybody, just to make sure that things are secure. You just want to keep that to yourself. In this case, this is just a demo. I'm going to delete this when I'm through. So I'm not too worried about sharing this one. But once you have your bot created, all you have to do is click on this little copy button, and then go back to the chart and click on one of your lines. So in this case, we'll do the entry line first. And I'm right-clicking on the line and then click on Add Alert on horizontal ray. And on the Notifications tab, you want to check this box that says Webhook URL and just paste that URL in there. And then go back to Settings. And we're going to call this alert BTC Entry. We'll just keep it really simple. And we're going to go back to TOMMYBOTS. And there's this little code generator on the side that just makes it really easy to generate a little code snippet for your alerts. So in this case, we want to buy Bitcoin. So we're just going to say buy BTC USD. And we'll go ahead and do a limit order, but you could do a market order if you wanted to. And we're going to click next. And you could say use 2% of my account or something like that. But in this case, just for the demo, we're just going to buy a very small amount of Bitcoin, since I don't really want to buy a lot at this moment. But we're going to go ahead and buy, how about 0.0003 Bitcoin? How about we do that? And we'll go all the way to the end to the Finish tab and click Generate Code. And it generates this little code snippet that we can click on the copy button to copy, and then go back to Trading View, triple click in the message, the alert message, and paste it in. And we'll click Create. And so now our entry line is ready to go. All we have to do is, if we wanted to buy on this demand zone down here, we could drag it to the top of the zone or the middle of the zone, or however you want to trade it. And so let's go ahead and do our stop loss and our take profit. So we'll go back to TOMMYBOTS, and instead of buy, we're going to say sell. We're going to leave Bitcoin, BTC USD, we're going to leave that the same. But because it's a stop, instead of doing a limit order, let's go ahead and do a market order. And we'll click next. And instead of saying we want to sell the exact amount, we can say that we want to sell our entire position. So you can say 100% of the position. We could say 50%. It's up to you. In this case, we'll just say 100% to make it easy. And that way we could just reuse the same line over and over and over again as we trade it. So you only have to set this up once. Once it's set up, it's literally just a matter of dragging lines around on your chart. So we'll go to the Finish tab, click Generate Code, and now it gave us a new code snippet that we can paste into our alert. So I'll go to Add an Alert on the stop loss line. We're going to name this BTC Stop, and we'll go ahead and paste that message in there, and that one is finished. So now we can drag that to the bottom of the demand zone, however you want to trade it. And we'll go ahead and use the exact same code for our take profit. So we'll add an alert on the take profit line. Call this BTC take profit. And we'll paste in the same exact code. So it'll do a market order when it crosses the line selling 100% of our position. But again, we can change the 100% to 50% or 70% or however you want to trade it. And now that part is done. Actually, my line is labeled 50%. So we'll go ahead and change that to, now it doesn't matter, it's just a label, but we'll change it to 100% so that it makes sense. And now this you would typically go and put at the top of your supply zone. So just to show you how this works, we'll go ahead and buy some really quick. And I'll just take my line and I will drag it on top of the candle. So when the next time the price changes, it'll trigger. And so now we should have an order on our account. And it looks like we just bought some. So if I go to balances, you'll see that now we have 0.003 Bitcoin. That's how quick it happens, in like a fraction of a second. And so we'll go back to the chart, and let's just say that we wanted to take profit. We could take our take profit line. We're going to simulate that it's crossing the line, so I'm just going to drag it over the candle. And again, when you drag it on a live candle, the next time the price changes, it's going to trigger the alert. And if we watch our Kraken account, there it goes. It's gone. So it just sold it. And if we go to TOMMYBOTS, and there's this little alert log section that you can click on. And if we click the refresh button, it will show us this is when we bought. This is how much we bought. We bought using a limit order at 26,415. And so it takes the current price of wherever the line is at the time that it's triggered. And all of the information for all your buys and sells will be listed here in the logs. And so you can see that there's our sell, there's our transaction ID, and you can always double check it with your account. But that's literally how easy this is. So from this point on, you don't have to configure your bot anymore. You can literally just drag lines around on your chart. You don't have to type any numbers in, and you can draw out your zones and just drag your lines around. TOMMYBOTS does a lot more than what I'm showing here. So for example, you can say if the price touches the zone and then some other indicator gives a signal and then another indicator gives a different signal, you can combine all those signals together for one buy or sell. We call those group alerts, and we have a bunch of information on our website about that. We also have other videos on our YouTube channel about that, so make sure you check that out. But if you want to keep it simple and just trade lines on a chart using a bot, that is how you do it. It can't be any easier than that. So if you have any questions or comments, please leave them in the comment section, and I'll see what I can do to help out. All right, guys, take care.